A couple months back on this channel, I covered the Sam Zell Real Estate deal that eventually fell apart, where his REIT, Equity Commonwealth, was set to merge with Monmouth Real Estate, which is an industrial REIT focusing on warehouse and distribution type properties. Personally, I'm an Equity Commonwealth shareholder, so I was very interested in this deal. Plus, it was interesting to see what Sam Zell was doing during this otherwise hot market, and he was trying to break into the industrial space, which already has seen a pretty substantial run up in prices as cap rates have continued to compress in industrial real estate specifically. Sam Zell and Equity Commonwealth were set to acquire Monmouth Real Estate for approximately $3.4 billion, which was based on the new shares that were going to be issued to take this merger on. So we'll use $3.4 billion as the sort of purchase price. Now that meant that at the time, Equity Commonwealth was buying Monmouth Real Estate's portfolio for essentially a 4.5% cap rate based on the then NOI of around $146 million for the Monmouth portfolio. Now, Monmouth's portfolio is a very high quality industrial real estate portfolio with actually the majority of the rents coming from FedEx. So there's a lot of single tenant risk here, but it's all grade A tenants. You got big names like Amazon, FedEx, and other sort of e-commerce focused, distribution focused tenants that are highly sought after in this current market. And even Sam Zell was willing to pay below a 5% cap rate in an already hot market in an already hot sector. So that was an interesting move coming from someone who's known as the grave dancer. Well, long story short, that deal fell through, even though it seemed like at the time that Monmouth was getting a pretty good price for its real estate, but there were some competing bids that came in after the offer was already accepted and they were doing their due diligence. You saw some tensions kind of rising, and it seemed more and more likely that Monmouth was going to be pulling out of the deal, which they ended up doing, and they paid a severance fee to Equity Commonwealth, so they didn't get left completely high and dry, but they lost out on the deal. Equity Commonwealth did. And fast forwarding to today, once again, Monmouth Real Estate is to be acquired, only this time by Industrial Logistics Properties, and also this time at a $4 billion valuation. So in just a span of 2 months, Monmouth Real Estate has increased their ultimate purchase price or merger price by $600 million off the original $3.4 billion. And that means that Industrial Logistics Properties Trust is buying this portfolio at around a 3.5% cap rate, almost a full percentage point lower than what we had with the Equity Commonwealth deal. Now, ILPT already has a few hundred properties under its belt. This is going to be adding another 126 properties by incorporating the Monmouth portfolio. If this deal closes, of course, there's no guarantee that it does. But I think an interesting lesson here is that Sam Zell looks like he was actually getting a pretty good deal. Now, at the time, I thought, and many others also thought, that he was really paying a premium, given that he's known as the grave dancer. He really goes for distressed real estate. But in this case, even within the hot market, it seems like he had a pretty substantial margin of safety, if you will, if he could just turn around and sell the properties at a 3.5% cap rate instead of the 4 to 4.5% cap rate that he bought it at. And that's, again, within just a span of 2 months. And even if he sold off a portion of these properties, he could have used that and reallocated it into something else that might be more undervalued or whatever the actual goal was with the acquisition. The point is, Sam Zell was still able to get a discount on the price. Of course, the deal eventually fell through, so I don't want to give him too much credit since it ultimately didn't work. But I do think it's interesting that investors are willing to take this low of a cap rate for an already very mature portfolio of Class A tenants. It really shows how starved investors and funds are for yield, but also perhaps just how bullish people are with industrial properties in general. Obviously, there's tailwinds with the rise of e-commerce and the fall of most brick and mortar retail. That's not as though people are stopping their shopping, they're just doing it in a different way. And industrial real estate on the distribution side in particular fills that void. So there's definitely a lot of tailwinds. Investors see that. So you're going to expect to pay some premium based on today's cash flows as you expect them to grow into the future. But still, it doesn't justify paying extremely low cap rates, at least in every case, since that's just adding risk. You're paying more for the deal, and then you need more to go right in the future when you get it at a premium compared to the current cash flows today. But in any event, it looks like this would have been a pretty good deal for Sam Zell, at least based on these numbers, assuming this transaction goes through and this $4 billion number actually does come to fruition, and that is what happened. happens. And I suppose it's slightly reassuring that even if Sam Zell was going to be overpaying a bit for the previous deal that ended up falling through, there's someone else that's further down the line who is going to pay a lot more. And I guess that's all you can really ask for when you're overpaying for any sort of investment. I'm still curious whether Sam Zell's going to continue trying to go for an industrial real estate portfolio, seeing as though, look at the premiums that these things are selling for, and that doesn't really seem to be his cup of tea. So we'll see if he goes for some other route, if he just keeps waiting things out as he has been with the Equity Commonwealth portfolio. They're currently sitting on a large pile of cash relative to their market cap. They're at a market cap of something like $3.1 to $3.2 billion, and they're sitting on $3 billion in cash. And depending on how you actually value the 4 properties in the Equity Commonwealth portfolio, it could be a significant discount, depending again on how you do that valuation work. But maybe this ILPT deal does show that Sam Zell's plan was going to be to flip a lot of these properties right away to raise some cash based on the decent purchase price he got relative to the already scorching market. So he could have just sold the properties off very quickly for a quick profit without really doing anything. Of course, I am speculating about a deal that never actually happened, but I think it is worthy of discussion anyways, just to kind of show what's really going on in this industrial market. But anyways, if you guys like this video, definitely like it since that would help the channel out a lot. And if you like this sort of content about investing and personal finance, then definitely subscribe since I put out new videos every single week and wouldn't want you guys to miss out. And check out the free stuff in the affiliate links in the description below. But until next time, take care.